Hey guys, Michael Brown with Churchill Mortgage. I want to introduce some of my teammates here, Austin McDaniel and my son Colin Brown. And we're going to start a new little series called Tell Me Something Good, kind of like Bobby Bones does on his country station. But all we hear is doom and gloom about the housing market and mortgage rates and in the mortgage industry. So we're going to put a little different spin on it and tell you about a lot of good things that are happening in the market right now.
I mean, for sure, because high interest rates, prices are through the roof, and all you hear about is just negativity. But still, buying a house is a good thing.
What better time to bring a little bit of positivity around? Everybody needs to hear it. I mean, holiday season is upon us, so let's have some fun and talk about what we enjoy on our day-to-day.
Hey, talking about holidays.
Boom!
Christmas hat here for you boys.
So let's just say this.
Because actually, Christmas has come early for a lot of people looking to buy right now. So
let's jump into
Deals
it.
are to be had.
Yeah.
So let's just see. Let's jump into that. So what are some positive things? What are some good things that are happening all right now?
Let's talk about mortgage rates. The National Association of Realtors and Mortgage Bankers and CoreLogic and Fannie and Freddie, they're all forecasting rates to continue to decrease going forward into 2024 and 2025. So I know it's been a crazy market this year in 2023, but I'm super excited about what the future holds for our clients and the housing market going forward.
And we saw the biggest jump in rates, obviously, with CPI report coming out. Inflation is slowing down. All the market projectors that they've preaching this for so long, saying that rates are going to come down, we've finally started seeing those little bit of cracks and those glimpses as far as rates coming down. And we've seen that over the past month for sure.
We've been questioning the Fed's policy for well over a year now, but finally their policy is starting to show signs that it is working. People are spending less money. Unemployment is starting to increase. Seasonal jobs are at the lowest levels they've been in quite some time.
Right.
Inflation has come down. These are all things showing that the economy is slowing down, which is what the Fed wants to see. Right. And as the economy slows down, prices will eventually come back down, thus inflation will follow, and mortgage rates typically follow inflation. Right. So that's why we're seeing this downward trend in mortgage rates over the last 30 days.
Which, if that's good, that's called telling you something good.
Tell me something good. Colin, tell me some other good news we've received recently in the mortgage world.
Well, first of all, let me just say, anybody who's familiar with real estate in general, they know that it's always a good time to buy. And so we're hearing a lot of really good stories about people who are staying true to that belief and who are out there looking for deals. They are getting good deals. And so there's tons of flexibility on how they're doing that. And I really want to dive into that because that's the information that people need to know, whether they're sitting on the fence or they're out there fighting on a day-to-day basis. There are good deals to be had out there. And the ones that have been doing this a long time, they're sharing that experience with us every single day. And that's what we're trying to bring to you guys, because that's what you don't hear on the media, is all the wins that are happening and that long-term effect that it's happening on people's personal situations and, their family generational wealth. And that real estate's the best way to do it right there.
One thing I'm seeing a lot with my clients is a lot of 2-1 buy downs,
right.
A lot of sellers paying closing costs, lowering the price. There's a lot of great deals to be had right now.
I mean, and it's kind of funny because we talk about it all the time. And essentially, people are so scared of like a higher interest rate market and everything. But in a sense, it's allowed a lot of buyers to be able to negotiate a lot of different things because there's not as much demand that's in the market. So the buyers that are out there, you know what? Rates are a little bit higher. But you know what else? You don't have as much competition in the market. So the same thing like you're talking about, negotiating prices, getting a 2-1 buy down that's paid for you by the seller. I mean, you talk about a huge impact on your monthly payment, and knowing in the back of your mind, you're going to be refinancing with the rest of the world, whenever rates come back down, even more.
Talking about rates, the reality is as rates come down, more people who are on the fence will get back into the market. Nationally, and especially in certain pockets, we still have an inventory problem. So as more people get back into the market, you're going to see a supply and demand issue like we had in the past.
Right.
Home prices will go up for sure. So you may end up getting a lower rate, but you're paying much more for the home. You're not really coming out ahead at the end of the day. Buy now, get a great deal on a house, negotiate that lower price, seller concessions. Rates come back down, you can do a quick refinance. you're going to end up saving a lot of money long term.
100%.
Yeah, and so that number that the feds have been mentioning for the last couple of years now is 2% on that inflation rate, 2%. And so after today's reports, and consistently the last couple of months, that number has been getting closer and closer. So as we see that number keep getting closer, rates, over the last couple of weeks have improved a little bit. That's fantastic. We'll take it all day long. What does that mean for people who are actively looking right now? What kind of conversation are you guys having about how to manage that and how we take care of that on our end for them?
Well, essentially, we kind of go through a full consultation as far as, where rates are. We go through the projections of what we see rates could be as far as in the future. But at the end of the day, we talk about this all the time. If there's somebody that tells you they know exactly what's going to happen in the market, even next week or month or whatever, they're liars. No one knows. All we can do is base it off of like the data and trend in the past and the history of kind of how the market has reacted to those different things. And so we take a pretty conservative approach to that. Right. Just to show them, to say, hey, this is really what this could look like based on the professionals that are saying that.
So at Churchill Mortgage, we have some awesome competitive advantage programs that we talk about with every single one of our buyers, no matter where they are in their home buying process and no matter what their timeline looks like. Because here's the deal, there is no losing situation when it comes to our competitive advantage programs. They are only there to put you in the absolute best position you can be in. And worst case scenario, your timeline's a little bit further out than you expected, and all we have to do is make sure your file's up to date and we can renew those as many times as we need to. So, Michael, tell us a little bit about our competitive advantage programs and how they work.
One of the main programs we have is called Homebuyer Edge, where clients, instead of going through a typical pre-approval, which is done quickly over the phone, half-fast most of the time, we go into a deep dive with the client. We immediately get that file into underwriting while they're looking for a property. So we're doing a complete underwrite of income, assets, credit, everything up front while they're shopping. And once they go through that underwriting process, they're considered a certified home buyer. At that point, we can cap the rate at the market at that point for 90 days while they're shopping in an environment where rates are very volatile and going up and down. That protects them in the event rates going higher. But once they're under contract, if the rate is lower, they get that lower interest rate. That's the second benefit. And the third benefit is once they go through this process and they're considered a certified home buyer, you can close in half the time. We don't have to start the underwriting process once you go under contract. We've already done all that. Now we're just looking at appraisal, title, homeowner's insurance. We can close typically within a couple of weeks, which is very appealing to a seller. And another benefit to the seller is we guarantee the seller $10,000 that if that deal falls out because of financing, we'll pay them $10,000. So we look at the fact that you have a competitive situation with multiple offers. You have a client who's already gone through underwriting. There is no financing contingency. We're closing half the time and guaranteeing that seller $10,000 that loan won't go through and will not fall out because of financing. It's pretty powerful.
I'd accept that offer.
You talk about telling you something good. That's pretty good.
Tell me something good. Another piece of positive news that came out recently was increased loan limits. Go ahead and tell us about that.
Yeah, we got some good news on that. So Fannie Mae comes out with their loan limits every single year to basically make sure for inflation and appreciation and everything else like that, they'll adjust those loan amounts. So for this past year, it's been $726,200. So $726,200 is that loan amount to avoid it being a jumbo loan. They've increased those now to $766,550. So that is the new standard conforming loan amounts per Fannie Mae's guidelines, which is fantastic. And the reason why that's so important is because, jumbo loans, we do those at Churchill all the time, but not everybody can qualify for those because sometimes it requires a higher down payment, reserve requirements, everything else that kind of goes into that. But those standard conforming loan amounts means that you can still do a conventional loan doing the minimum down payment and, can traditionally sometimes have more favorable terms than a jumbo loan.
Yeah, that was really exciting. FHA just raised their loan limits as well.
Exactly.
And of course, VA loans no longer have a maximum loan amount. So we love our veterans. We love doing VA loans. If you have any questions about the VA product, then we'd love to talk to you further about that.
And one more thing on the new conforming loan limits, because for those who are local here in the Middle Tennessee area, counties like Williamson County, Davidson County, Cheatham County, they actually have even a higher max conforming loan limit of $943,000. So that is a huge deal for anyone looking in that market. And we can strategize on exactly how to maintain that conforming loan limit without going over jumbo.
Just more great loan options for our clients. I love it.
Exactly. Options.
Once again, another great piece of news that came out recently was for those folks who are interested in buying a multi-unit property, which a lot of people are interested in buying a 2, 3, or 4 unit property. And if you reside in one of those units as your primary residence, in the past you had to put either 15% down or 25% down. And now you can get in with as little as 5% down, which is amazing. So
that's huge.
That opens up a lot of opportunity for folks looking to buy a 2, 3, or 4 unit property. They can get in with much less down in better terms. So that's very exciting.
And they have to they'll occupy one of those units, but they can get income off of the other ones.
That's correct.
That's huge.
You hear about all these real estate hacks and all these different strategies people are using on social media. And I don't know if I agree with all of them, but one of the more common ones that you do hear is, especially if you're a first-time home buyer and you're looking to create passive income or take some of that stress off of that new mortgage payment that you're not used to, finding a duplex, a 3-unit, a 4-unit property and occupying one of those properties, finding renters for the other units and allowing them to pay you rent on a month-to-month basis to offset whatever mortgage payment you have to make, that is extremely powerful over time. And with these new rules, only having to put 5% down to buy a duplex or a 3-unit, I mean, talking about a house hack right there. That one I'm all about.
100%.
Agree.
You just got to like your neighbor.
It's about building wealth through home ownership.
Yeah,
that is a
exactly.
great way to do that.
100%. Yeah.
So let's talk in more detail now about how a recession directly affects mortgage rates in our industry.
So essentially, we've had recessions in our country for years and years and years. And you can look back over the past 60 years of the recessions that we have, and 100% of the time, mortgage rates are going to fall whenever a recession happens, because a recession is deflationary in itself. And as we know,
did I hear you say 100%?
100% of the time. And the reason is because recessions are deflationary in themselves, and mortgage rates always follow inflation. So if a recession is happening, inflation is coming down, mortgage rates are going to follow that every single time.
Yeah.
And what's really interesting, if you look, people think that we're going to be in a housing bubble.
Oh, this is good.
We go into a recession. But if you go back through the history of all the prior recessions, home prices have increased every single time we went into a recession, except for one time, in the 08, 09 meltdown. And of course, that was due to toxic mortgages, inflated values. People were underwater in their homes. They owed more than what the home was worth. But besides that one time back in 08, 09, home prices increased every single time we went through a recession. So mortgage rates came down, home prices continued to go up. So people don't understand, they think doom and gloom when they hear recession. But for the housing market, historically, is proven to work out really well for clients.
I mean, yeah. And I mean, there's so much fear that happened in 2008 and everything, which was rightfully so. And, they have put the kibosh completely on anything that was remotely like that. In fact, it's so much harder to get at, through underwriting it anyway. So
I always joke that we're no longer a mortgage company, we're a compliance company that offers mortgages on the side.
Yeah.
That's what it feels like on a day-to-day.
Yes.
Which is a good thing for the client.
It is. And it's good for the whole market in general.
Why is it so much safer for a borrower, or why are there so many more restrictions, and what does that look like in our seat when we're talking to a borrower today compared to what was available prior to 2008?
I can tell you from doing this 28 years that years ago, if you had a pulse on a credit score, you get an approval and go to closing. There was no income, no asset loans, stated income, stated asset. Things that it went extremely liberal in the requirements and put people in a terrible position. A lot of people ended up being foreclosed on, and they couldn't afford the homes you were getting into. And those days are way behind us. So we make sure here at Churchill, and most lenders, they have a true heart of a teacher. And I'm not here to sell anything. I tell my clients, I'm here to educate, teach them about the process, what options are available, and they can make a decision from there. But I can tell you, the guidelines are set up today where they're conservative. Everything is highly vetted and verified, and they're not going to put anyone in a position where they can't make that mortgage payment and stay in their homes. So I think the changes were, again, like everything else, the pendulum swings extreme to the other side. But to protect the consumer, I think it was great, the changes they made. And I can honestly say I can't ever see anything like 08, 09 happening again due to toxic mortgages because of the restrictions that are in place today.
Yeah, and the credit guidelines and everything. And, you know, in the long term, in the long grand scheme of things, it's beneficial for everybody, you know.
I always say that especially in today's world, if you are not constantly adding value in many different ways, you're going to be left behind. I mean, that's just the bottom line of what people expect. And so, especially for our team, I know each one of you and me, myself, I've made a huge focus on surrounding myself with as many people that can add value during this process, no matter what situation that client is in, because they need more than just somebody to give them their loan options. And so we really do come at it from, like you said, an educational position. We're trying to educate, make sure they understand all the moving parts, all of their options. But then we take it another step further. We really look comprehensively, which I think is another thing that really, you know, some of these guidelines have forced us to do in a way, but that we really enjoy as part of our job. And we're diving into their overall financial position and what they can do to make a really well-informed decision and how that mortgage fits into their overall financial plan. And so taking it one step further and talking about more than just their mortgage, but what does their cash flow look like? What does their debt management look like? How can we most effectively use their liquid funds for a down payment to structure the loan in a way that's going to, you know, benefit them long term? I think that is the new era of lending, and we've done a really good job with surrounding ourselves with people who can help on tax planning side, or who can give us really unique products that they don't have to change their entire financial plan to qualify for a mortgage. And so, do you guys have anything else to?
He killed it. That was it.
No,
Yeah, that was
that's
good.
great. I think, you know, for most people, a mortgage is the biggest financial decision they'll ever make. And to make sure that we get them into a product that fits into their overall financial picture, so that they can gain long-term wealth is very, very important. So again, surrounding yourself with other partners, financial planners, CPAs, insurance agents, so forth, is critical. It's a total team effort today.
And so I say it a lot, and you know, I hear you guys say it too, and it's important. We have to put an emphasis on this, but we have so many different investors in our portfolio, and sometimes I think that just kind of goes over people's head, but it's a really big deal. And so when we say that we have that many options in our portfolio, what does that really mean? I mean, are we shopping 28 people, or how does that work kind of behind the scenes?
Well, instead of having, some lenders only have one small product set to work with. We have a whole portfolio of different investors, and most of the investors have similar products. But we also have several investors who have niche products that most lenders don't offer. So besides the cookie cutter conventional FHA, VA, and so forth, you know, we have products for non-mortgageable condos or condotels or
bank statement programs, asset depletion.
You know, people who have a lot of assets, but they're paying income, or there's so many niche products that are out there. I have one right now I'm working where he's a W-2 earner, cookie cutter, but he also has a side job and writes everything off on a Schedule C.
Right.
However, they're going to scratch the Schedule C where he uses verified W-2 earnings plus the last 12 months bank statements for his self-employed job, which give us enough qualifying income to work with to get him into the home that he's looking to purchase. So there's a lot of creative ways out there to help people get financing. And we have the products and the investors to be able to offer all these niche programs to our clients.
I think it's really cool the fact that, I mean, there's been times for all of us, and I'm sure we all have individual stories we can talk about, but when people come to us where they're saying, you know, I've talked to a bunch of different people and all I've been told is no. Well, if we can find a way to say yes, I mean, that's ultimately the dream opportunity to see how can we make your situation work based on the products that we can offer.
I've also come into a couple different situations where there is a self-employed borrower. Maybe there's a spouse who has additional income that they can use W-2, a little simpler, but simply because of the way they prepare their taxes, they are showing significantly less income. So they have talked to a lender and they do have a solution. but let's just say they're maxed at a $300,000 purchase price. It really limits them, especially in the Middle Tennessee area.
Right.
If you're capped at a $300,000 purchase price, and so even if someone is in a position where they're pre-approved, they seem like they have an option, let's explore that option again. If you're making well over what you write off, which is probably the case for any self-employed or anyone in that type of work, then there could be more potential out there for you.